Another episode of Bullish Chips, where we talk about chips and only chips, more specifically the Direxion Triple Leverage Semiconductor Bull ETF, which goes by the ticker symbol of SOXL. Go ahead and hit the subscribe button if you haven't already. Just a reminder, we are not financial advisors. We do not offer financial advice. What we do offer is our view of the price movement in SOXL, both in today's action, previous action, and where we think it's going to go in the future. Just wanted to give a quick video today, kind of recap where we're at the end of the week. We'll do another video this weekend to go a little bit more in depth as to where we think the week's going to go, but today will just be a little recap. Starting off on the week chart, we're still below the year flip, so when we look at to the left hand side at the full time frame continuity, we do have the week, the month, and the quarter, which are green. The year is still red, so we're still below the flip, 2813, and we did, however, get a seventh green week in a row. So we did explore above this flip just for a brief amount of time. No real action up there, and we pushed back down. So we still closed within last week's range, but at one point during the week we did go 2 up. So this candle is basically a doji, a little fatter than a doji, but doesn't really give us much more information as to where we're going to go from here, other than we're still in a bullish uptrend on the higher time frames. So not only on the week, but if we look at the day, we're not necessarily in an uptrend, but we have come into a broadening formation, right? So we're trying to decide right now on a daily time frame whether we're going to continue to push up, or we're going to go ahead and reverse down below this monthly downtrend line, below this weekly broadening formation, and below this week flip. So we do have the quarter flip down here at 2438. So if we do push down and do break below this daily broadening formation, that would put us below the month and quarter flip, meaning we would have full time frame continuity to the downside at that point. That would be a little bit more bearish, to say the least, I would say. And we'd probably look to possibly fill this gap down here. It wouldn't be a huge stretch, but it would be actually a decent push down. So maybe even if we don't fill the gap, we come to the gap and bounce off of it, maybe wick off of it, and still close, within this daily broadening formation or just below it. This is a weekly uptrend line. It's a small dash line because we don't put a lot of faith in trend lines. We just use them to see if they coincide with any other horizontal levels that we do put a lot more weight in. So again, we didn't go 2 down on the day, but it was a red 2 up. So we closed below where we opened and within yesterday's range. So not the most bearish signals, but more bearish than bullish, I would say. Actually, we're 2 up, so it's kind of even, I would say. The bears had a little bit more of the upper hand, but again, it was options expiration day, so you can kind of expect the candle to be flat or even red on options expiration days if you go back and look at the history. So not a real surprise that we closed where we closed around all of these resistance points that coincide. We don't need to totally be respecting each line, like wicking exactly off of it or anything like that, but just the fact that we got stuck here in sideways action essentially for 1, 2, 3, 4, 5, 6, 7, 8, 9, maybe 10, 11 days. We've been in this range. 12, 13, if you want to count the larger range back to the quarter flip, back to the beginning of the month. So haven't really gone too far. We've just been on a slow grind up, so we're still in our call swings for the longer time frames, and everything's still looking good there. If you weren't able to see the intraday action, we'll go down to the 15 minute, and you can see we got a drop. We didn't get into, actually, we got in pretty early, but we got out a little early as well. We didn't want to overstay our welcome inputs. So if we look at the 5 minute, I think with the lower high on the 5 minute we got in, there was another lower high, lower low, we pushed down, and once we closed the close of yesterday to open of today gap, once we close that, we got down here onto the 1 minute. Again, didn't want to overstay our welcome, and we can see that at some point, yeah, here we made a higher high. So after we made this lower high here, we went down, essentially closed this gap. So we had moved our stops to here at that point. And once we went up, there was basically a liquidation flush on a small time frame where we just got that quick wick up. We got stopped out, no big deal. We got profit. Not a lot of profit, but we got a little bit. We don't play too heavy on Fridays, and even when we do, we don't play 0-day contracts. So we're not looking to get rich on, especially on Fridays. But it was just a little play, something to do in the morning, because again, we do like to kind of, after about 12 p.m. Central, we'll kind of give it a rest and just cruise on into the weekend, which again you could kind of see on Twitter. We mentioned that we were stepping away, and did come back at the end of the day and give a little bit of an update. But make sure you're following us on X at Bullish Chips, so you can see our real-time trades that we're putting in, and our entrances and our exits. So real-time levels, specific price levels, and things of that nature. So make sure you're following us on X if you're not already. Again, subscribe to the channel if you're not already. Hit the notification bell. That way you know when we release our videos. We try and release one every day during the week, and at least one on the weekend, just to make sure we're prepared every day for the next day of trading. Not only from an intraday, scalping and day trading perspective, but from a swing trade, short-term swing trade and long-term swing trade perspective. So again, we're still sitting pretty nice. Go back to this week chart here. It was a green week, so we've had a seventh green week in a row. I don't remember counting another time when we had 7. I think, or no, there was one other time. I've got to go back and look, but only one other time at the max that there was 7 straight green weeks in a row without a pullback. So considering where we're at and with the resistance zone that we're in, we won't be surprised if we get a pullback next week. It may not be immediate. It may not, on Monday right from open be a pullback, but it could come, and it could be pretty quick. So just make sure you're following your trading rules. You're managing your risk to reward, and you're making at least a little bit of profit every day on a day trading and scalping perspective, and then making a good amount of money on safer plays, longer plays, swings that you allow time to just build and build. So again, watch for another video this weekend. If you have any questions, post them in the comments, and enjoy the rest of your weekend.